So I'm making this video today to explain to you why most business owners overpay in taxes and why this actually has nothing to do with the tax rate or even the way that the system is set up. The system is not rigged against you as a business owner. If that were the case, then all these stories about millionaires and billionaires like Donald Trump and Grant Cardone that we hear paying $0 in taxes, even though they make all of this money. They make millions of dollars a month, yet they're paying $0 in taxes. And so if the system were rigged against a business owner or against any business owner, then this would not be true. Then that would not be possible for them to be able to do that. And so the truth of the matter and what you can logically conclude is that there is a knowledge gap that is creating this issue. And the positive about this is that knowledge gaps are fixable. If you are right here, the average business owner, and they are over here, there is a way to cross that bridge and a way to get to their level, right? Throughout this video, the one thing that I want you to keep in mind is that the IRS doesn't tax what you actually make. They tax what's left on paper. And so the actual problem is that most business owners are calculating their tax bill wrong before they even get to filing, right? So most are treating their gross income like their taxable income, which these are two completely different things. So most people treat it as a simple math equation that if you made $100,000, you pay taxes on the $100,000, which is not exactly true. But that's the assumption that most people are operating on. When the reality is that the IRS taxes on what is left over. And this is what is shown on paper to be left over, right? And so this sounds complex, that there must be some complexity that is hard to understand to get from showing a lot of money to showing less money on paper, right? And so I'm going to explain that to you. And so the problem isn't the tax rate, right? The problem is not knowing what counts against your taxable income and actually lowers it. So real quick, I'm going to provide you with 3 examples that you might not be thinking about, because each of these is something that doesn't actually take place, so it feels like it shouldn't lower your tax bill, but all 3 of them do. So the first one would be the S-Corp election. This is a common thing that you've probably heard about, but the way that it works is you have your LLC set up like every business owner, except you elect to be taxed as an S-corporation. And what this does is splits your profit into distributions and salary. And the way that it saves you money on taxes is it says that you made less than you did because only the salary portion, which is a lot lower than the overall profit, hopefully, will be taxed at the 15.3% self-employment tax. So I know business owners that I've worked with that even early on, once they make the S-Corp election, they're able to save $8,000 to $12,000 just on the self-employment tax because it is that powerful. And so the second example is something that I want you to start thinking about that doesn't materially take place in your business, but is able to lower the taxable income on paper is retirement accounts. So something like a solo 401k. These allow you to contribute to them with your money, and it reduces your tax bill. It takes away from the paper income that you have by being a personal expense that you get to take, and you get to invest it as a retirement account. So these are super powerful because 1, you're lowering your taxable income, which is the ultimate goal of this video, but also you're able to compound on that money. And every year it'll grow and grow. And so it's growing your net worth while also you're giving less to the government. So it's a win-win. And so the third thing is depreciation. So think about if you have a building or a vehicle or even smaller things such as a MacBook. These things are allowed to be what's called depreciated, which means essentially you're getting to incur additional expenses on the value of that item over its life. And so that sounds complex, but the point of it is that you're not incurring additional expenses each year, but rather you still get to take a portion of the total cost each year against your taxable income. So for simplicity's sake, let's say you buy a $600 MacBook and the depreciable life is 6 years. These are estimate numbers, so don't take them as word, but just for simplicity's sake. Each year over its life, you would get $100 off your taxable income. Now, that doesn't sound like a lot, but think about the possibilities once you have a $1 million warehouse, and each year you're getting to take $50,000 off your tax bill. So it can really add up and be something that's super powerful for you. And so the reason I chose these 3 examples is because they're not as common, because most people would think, oh, it has to be something being used in my business. It has to be an actual expense. But these create expenses on paper because of the way that the tax system works. And so the biggest thing is that nobody is teaching this, right? You don't learn it in school. Most accountants are teaching it to their clients. And, your parents, your job, these things aren't taught there. I took accounting classes in school, and I didn't learn these things. And so most people only talk with their tax person once a year, so they're not actually making a difference each year in their tax bill. But this isn't something the IRS is hiding from you. The tax code literally spells it out that this is how it works. And once again, that's where that knowledge gap exists of the average entrepreneur versus the millionaire who is paying $0 in taxes. This is the knowledge gap that exists. The knowledge gap is the fact that they understand how the tax code works and what it rewards and the things that it recognizes to lower your taxable income. And so none of what I've described today is super complicated. It's not something that's complex. It's just understanding the framework that the rich people that pay $0 in taxes are using. The tax code tells you exactly what qualifies, so it's not a mystery. It's just a knowledge gap of learning the knowledge of what qualifies and what doesn't. The things that can reduce that paper income number that the IRS looks at. And so this video serves as a first step in understanding what you're missing. This video identified the knowledge gap in between the average entrepreneur and the millionaire who makes millions a month but pays no dollars in taxes. And so the second step would be to be putting a structure around this knowledge to have a framework that you can rinse and repeat year after year so that you're able to continue growing your business and growing your revenue while still continuing to lower your tax bill year over year. So if you want to understand your full picture and understand how you can go from the average entrepreneur to the successful entrepreneur that is paying $0 in taxes, then be sure to subscribe, because I'm going to be filling in the knowledge gap with tax content coming soon. I have been posting on a different channel, but I decided I'm just going to consolidate them so that all of my content is in one place and easier for y'all to access and watch. So I hope this video was able to solve the mystery and to spoil the myth that the tax game is rigged and that it's against you, all those things, because those are not true. It is simply just a knowledge gap that has to be filled so that you're able to be like the rich people, be like the successful entrepreneur that understands the rules of the game and is able to play by them and get rewarded for it. At the end of the day, all the tax code is just a book of incentives that if you follow what they want, you produce the things that they want, and you stimulate the economy in a certain way, that they will reward you. So I hope you enjoyed the video, and I look forward to us talking again soon. And as always, never stop your relentless pursuit of continuous improvement.